to Market Matters. I'm Wei Lynn Tang, joined by Sulhi, Azman and Charlotte Chong. Now, the most talk about matter is, of course, the Federal Reserve decided to leave its interest rates unchanged at near zero level. And yesterday, the KLCI rallied more than 30 points, but today it's down 12 points.
Yeah, I mean, I think the market is still trying to recover from the post-effect of Janet Yellen's move not to push that interest rate trigger.
I was looking at the release, right? So it says that the main key thing I can take away is actually inflation. So it says that inflation continues to run below the committee's longer run objective of 2%. So as long as it doesn't hit 2%, it doesn't seem like Janet Yellen will, increase.
I mean, many economists are actually looking at the global PCE, which is the favoured gauge of Fed's inflation target.
But let's get to Charlotte for more on how the local and regional markets fared.
KLCI dipped 0.72% or 12 points today on profit taking to 1,669 points after gaining 34 points yesterday. Now we saw that KLCI actually shaved half of its gains yesterday to 1,669 points. Just to give some statistics, foreign investors bought 482.4 million yesterday, but we saw net sellers among local institutions and retail investors. As for the ASEAN region, Reuters said that Asian shares were likely to fall today after Fed decided not to increase their rates. Nikkei 225 dropped 1.96%, but in a nutshell, however, when you look at Asian regional market as a whole, Asian shares have seen raising on relief of the news when Fed decided not to raise interest rates. Hong Kong Hang Seng Index up 0.67%, Kospi added 0.98%. And anyway, investors are cautious about the next Fed move because a lot of people say that they might actually increase the rates by the end of this year. But some say, but then if that happens, we won't see strong funds flowing back into the region, into this region, ASEAN region. Analysts also suggested that a weaker greenback will happen as a result of low interest rates. And this will actually help supporting the oil prices. Oil prices is at about $49 a barrel. Anyway, when we look at CPO price, other than Brent oil price, CPO was at about 2,094 ringgit today. And RJN Plantation CEO actually said that smoke will affect palm oil production by 10% to 20%.
Indeed, the haze has been taking a toll on us for the past week.
It's getting clearer.
It is getting clearer. Hopefully, the sky will get a bit more clearer.
Thanks for that, Charlotte. So now let's move on to our hot stock of the day. Our hot stock of the day is Eco-World Development Group Berhad. It's up 9.6% or 14 cents to 1 ringgit 60 cent. Close to 19 million shares traded, and this is because it announced its third quarter results yesterday. On a quarter-on-quarter basis, the net profit fell, but analysts actually commented on the performance of Eco-World because of them managing to achieve its, not achieving yet, but raking good sales targets despite the tough property market conditions.
Indeed, yes. If you look in the year-to-date sales, right, year-to-date sales are actually about 2.372 billion ringgit, and they are targeting a rather bullish target of 3 billion ringgit. And now, if you make that percentage out of that, it will be like 80% of the target. Now, the question remains, will Eco-World, which is controlled by Tan Sri Liu Kee-Sin son, Liu Tian-Shong, with a 35% stake, be able to rake that target, a sales target of 3 billion ringgit?
If you already achieve 80%, so you're talking about 20% more in how many months would that be?
I think that would be 3 more months.
3 more months. So according to CIMB today, the note, it says that the group Eco-World could actually end the year as the developer with the highest sales in Malaysia, a major feat actually for a relatively new company. So when it means new company, I don't think they actually meant the management, they actually meant the entry of the company.
Indeed, yes.
Into the property
Indeed,
sector.
Eco-World actually was part of the reverse takeover scheme back then. And if you look at the market cap, right, the market cap is about 3.736 billion ringgit, which matched that of Ma Sing's and IGB Corp. Within that span of after the takeovers, right, they are actually managing to be one of the respectable property players.
Size does matter in property. According to CIMB as well, it says that the fourth quarter results should be stronger because it's driven by its high unbilled sales of about 4 billion ringgit. This is compared to 3.22 billion ringgit in the second quarter. So it's actually increased in the past quarter. But Alliance DBS, while it actually maintains a buy call, it has a lower target price because it actually says that, yes, sales has increased, but if you look at the expenses, it's actually been spending more on higher marketing and administrative expenses. And because of this, the third quarter, pre-tax margins actually dipped to 3.5%. Now, this is actually the lowest since Eco-World has changed its ownership in November 2013.
Indeed, if you look at, just drawing back from your point on the the property outlook market, right, it seems to be a bit more challenging. Now, both research houses today, CIMB and also Kenanga, has given a very high, quite a very substantial amount of discount rate. I mean, CIMB, for instance, says that the discount rate is about 10 to 30, has widened the discount rate from 30 to 30% from 10% earlier. And at the same time, Kenanga is a little bit more bearish on the property market. You know, Sarah Lim in her note today said that the discount rate, she widened it to 45% from 40% on concerns of softening property market at the moment.
Now, when analysts actually do widen their discount to all these property counters, right, by a larger percentage, like you mentioned, all these research houses, is actually because they are being more, prudent in terms of the weak market conditions? I
think they are taking a very cautious and prudent steps, basically. But then again, you know, if you look at CIMB, Kenanga and Alliance DBS, all of them have lowered their target price. For instance, CIMB has lowered to RM1.90 from RM2.45 previously. The same as Kenanga, lowered to RM1.90 from RM2.05 previously, as they impute a wider discount rate as well.
So just to take it all away for EcoWorld, shares of EcoWorld were up 9.6%, close to 10% actually today, after announcing its third quarter results yesterday. While the group is on track to achieve its sales target of 3 billion ringgit for the financial year 2015, higher marketing expenses could actually weigh on its margins. And also, while analysts remain positive on the counter, some have actually cut their target prices and also widening their discount to the company's revised net asset value.